How to get a 3% mortgage in 2024. Hi, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates. And today I want to share some information about a hot topic, assumable mortgages. Did you know that around 23% of existing mortgages in the US are actually assumable? That's about 12.2 million loans. But here's the kicker. Far, far fewer of those mortgages are ever assumed. So let's dive into what an assumable mortgage is, what they are, and why they might be a great option for you. Now, before we get too far, I'd be forever grateful for the subscribe. Click that bell icon to be notified as I'm putting out weekly videos on the channel. 97% of the viewers not subscribed. Now, let's talk about what is an assumable mortgage. An assumable mortgage is exactly what it sounds like. It's a loan that allows a buyer to take over the seller's mortgage repayments. These loans are typically government-backed, meaning FHA, VA, USDA. Now, compared to conventional loans, which make up the majority of mortgages, assumable mortgages are less common with those conventional mortgages, but they can be a fantastic opportunity for the right buyer. Now, the various types of assumable mortgages is what we're going to cover next. So you might be thinking, what kind of loans are assumable, right? We just kind of talked about FHA loans, VA loans, USDA loans. These are all government-backed again. That's a key term, government-backed. And they're designed to be assumable. So a veteran to a veteran, something like that. But finding one isn't easy. Not every seller lists the mortgage as assumable. So it might be a question to ask. Some may not even realize that it's an option. Now, if you do find a assumable mortgage or know that that seller is, let's talk about the big advantage, and that is the interest rate. When you assume a mortgage, you're taking over the seller's interest rate and payments. In today's higher rate environment, this could mean locking in a lower rate than what's currently available, which could save you thousands of dollars over the life of the loan. Now, in fact, we're seeing more and more buyers interested in assumable mortgages. In 2023, we saw over 6,000 mortgage assumptions. And that was a 139% increase from 2022. So it's definitely getting more popular. In the first half of 2024, we already saw almost 3,500 just FHA mortgages that were assumed. That's a pace to double what we did in 2023. Now, that might all sound great. Let's talk about the challenges now. Of course, there's going to be some challenges. It's not all rose-colored glasses here. First, the buyer still needs to pay off the seller's equity, either cash or by taking out a second loan. This means even if you're assuming a low-rate mortgage, you still have to cover the difference between the sales price and the outstanding loan balance. So if you buy a house for $400,000, they have a $200,000 loan, you got to come up with $200K. Second, the approval process from assumable mortgage can take way longer than other types of mortgages. You still need to qualify with the existing servicer or the lender that holds that note, just as you would for a new loan. I just had a client that took over 8 months to assume a mortgage. Now, why are assumable mortgages becoming so popular? Why is this becoming a hot topic and people are talking about? Simply put, and you probably already know, it's the interest rate. As rates continue to rise, we are looking for ways to keep those borrowing costs low. Assuming a lower rate mortgage is one of those ways to do that. There's a ton of other ways, and I've got other videos that you can click on to be able to see other ways to afford more in this market. Now, if you're interested in pursuing an assumable mortgage, it's important to work with a knowledgeable lender. A lot of times you're going to be a 1-800 number, but if you're not asking some questions or getting a plan B in place with someone like myself, make sure you're talking with your real estate team to find these opportunities up front. It is absolutely something that's out there, but they're just few and far between. Now, if it's not listed as an assumable mortgage, make sure and ask that question and have the seller double check. So to wrap things up, assumable mortgages can be a great option for buyers looking to take over a lower interest rate loan. But again, you have to come up with the difference. So there's definitely challenges in paying off that seller's equity to go through a potentially much longer approval process. If you're curious about Assumable Mortgage or want to explore your options, feel free to reach out. I'd love to help you navigate the process, help find the best solution for your home buying needs. Sometimes it's assumable, sometimes it's not. Thanks so much for watching. Stay safe, and we'll see each other again very, very soon.